Hi, I'm Stephanie.
And I'm Zach. And this is episode 579 of the Lawyerist Podcast, part of the Legal Talk Network. Today, Stephanie interviews Amy Woods about IOLTA accounts and, I can never say it right, escheating. Not only can I not say it right, I probably am not doing it right. So this is a topic that I think a lot of attorneys would be interested in.
Absolutely. So we won't talk about escheating because we'll get into that in a few seconds with Amy. But yes, it was a good reminder. I was like, haven't thought about this since probably Barbary. But one thing that's been coming up for our team lately, and maybe other people too, is that we have someone on our team that does a lot of the first round hiring screens for us, and we have several jobs that we're interviewing for, and apparently bots keep showing up to these interviews.
I saw that. And it's not like when we say bots keep showing up to these interviews, you think, well, obviously it's bots, and it's going to be like an animated figure that's coming in there, and it's blatant that it's a bot, but these are like deep fakes that are, I mean, passing a Turing test, or I mean, like they're tough to tell. What the hell? What's the point of having a bot go to an interview?
I know. I'm like, I don't understand, because the bot doesn't need a job. Like, are people out there creating these bots trying to troll us and they want to make fun of us? Like, do they think that maybe a bot will get a job? Because these things look like, to be fair, we're doing video interviews because we're a remote team. So these things are showing up to video calls and it looks like a person. Like, it doesn't, like, to your point, it kind of like, and like, poor Paige is like, wait a minute, is this a bot? She's like, I think it is.
And you kind of have to err on the side of this is a human, right? Because like, imagine going to an interview and somebody just saying, no, I think you're a bot. That would be devastating. Now, that would probably tell you you're not getting the job, because if you're doing just what a bot is talking about. But I saw a real quick clip of this, and they're answering direct questions, but in a shady way, right?
Yeah. I mean, it must be someone out there. Someone out there is probably maybe they're trying to test this tool and have it, like, it's the next iteration of like, haha, like maybe it's not just haha.
Yeah.
Maybe it really is like, hey, we did, it's like secret shopping. They're trying to secret shop to see if their bots pass as humans.
I don't know. My first thought was somebody's trying to get another job and they're going to have like 4 jobs with their bots that they created.
I mean, what if this bot got a job offer?
Right.
And then did this person set up an identity for them? Or to your point, maybe it is their identity. They just have bots going as them, and then they're going to give their social and collect a paycheck?
I don't know. I want to hear what people think is the end game.
Help us understand. Why are these bots trying to apply to work with us? We're going to have to put do we have to put, we already have to say, like, must be whatever the right word is, like, eligible to work in the U.S., or I don't know the phrase.
Yeah.
Like, are we going to have to say, and be a real person? Bots need not apply.
Is that, Stephanie, is that anti-bot though?
Well, they're not protected as a class yet.
Not a protected
They haven't
class.
changed our laws yet. They're working on that next.
That's why they want these jobs. All right, let's get into something real with you and Amy talking about IOLTAs and escheating.
Hi, my name is Amy Woods, and I am the owner of IOLTA Consulting. We're a firm that helps lawyers manage their trust accounts and everything from setting it up to closing it out to escheating and helping you with the audits, everything involved with your trust account. That's what we do.
Well, hi, Amy. I am happy to have this conversation with you today because let's just, get honest. Like, everyone has, we have our IOLTA accounts, and I don't know, they're a little scary, right? Like, they're just that thing that if sometimes it might feel like that's the ticking time bomb. Like, if I don't do it right, I'm going to get in big trouble.
Yes, I completely agree. And most lawyers go into law not wanting to do anything with accounting stuff or numbers or trust accounting. It's just a piece that they have to manage. It's not something they want to manage, so it gets pushed off to the side very easily. And once you push it off to the side, things can snowball out of control so quickly.
Yeah. And I thought it was interesting too, when I first met you and even in your introduction just now, like there's a lot of people who are doing, bookkeeping for law firms, which is super smart. And we've talked about that on the show before. But I thought it was interesting when I asked you, you're like, no, not bookkeeping, like really specific on IOLTA accounts. Like I'm helping lawyers with these trust accounts, set them up and manage them the right way. And I was like, wow, that's like really specific, but probably really needed.
Yeah, I don't do any of the bookkeeping or accounting work. I mean, I did for years and years and years, so I know all that side, but I really focus on just the trust account. So your bookkeeper will make sure your books are all right, even with your trust account. And oftentimes they also do the three-way reconciliation. But typically, your accountant or bookkeeper, that's where they stop. And sometimes they say, oh yeah, we're keeping you in compliance. And they are for that part. But a lot of them don't understand that if you get audited, there's so much more to the audit. They want to see all sorts of different documents. Some of them aren't even financial related. They want to see if you've been sheeting the funds properly, if you've been taking the right CLEs. There's so many other aspects of it. So yes, I work with accountants and bookkeepers, but I don't do that side of it.
Well, you mentioned one, but let me just kind of set us up here. And what are some of the big mistakes or, pitfalls that you see people kind of unknowingly get themselves into when it comes to their IOLTA accounts? I'm going to call them IOLTA accounts. Some states don't, we could just say trust accounts too, right? But that's that concept. Because I know some states leave out or add a letter or take away a letter.
They take out a letter. They call it IOLA.
There you go.
Or is it interest on? Yeah, or IOLTA or something. They take out a letter, yeah.
It's fine. We all know what we're talking about here. It's those things. It's where you put your client's money that's not yours yet.
Yeah, it is not yours. And that's one thing I really want to emphasize. The reason there are all these regulations and compliance is because this is not your money. You are a steward of this money, handling it for your clients. And when things mess up with the trust account, the public loses faith and trust in law firms and how they're handling things. So this goes all the way up to your reputation as a law firm.
Okay, so what are we missing? What are those pitfalls that we should be thinking about?
I think a lot of pitfalls are this gets pushed to the side so very often. And whether it's setting up the account properly or managing it from the get-go properly, usually gets pushed aside. And then something happens, a client complains, or you get audited, and that's when you start looking at it. And at that point, it's sometimes too late to fix a lot of things. If you have a mistake from several months ago, if you don't fix it within a month or so, it can snowball into something so much larger and so much more difficult to fix. So that's a problem, not taking full responsibility for it and expecting your accountant to 100% know what needs to be done for compliance. There are some specific questions you should be asking them. Have they ever been through an audit? Do they know the non-financial side of an audit of what needs to be in compliance? Are they going to help you keep track of what needs to be escheated? Will they show up if you get audited? So one thing is, if most accountants and bookkeepers will not be involved in the audit. So if you get audited, the auditor is going to ask you specific questions to your trust account. And if you're not familiar with that, that can be really difficult for you. So when I go in and help with an audit. I sit with the auditor, I walk them through all the questions. And then at the very end of an audit, the lawyer comes in and sees the report and signs everything. But most accountants and bookkeepers don't do that. So that puts the responsibility on you of being able to answer all these questions. And then a big thing that lawyers miss is the whole escheating process. Often, one of the big ones is outstanding checks. So when you write a check out of your trust account, kind of in your mind and even in your accountant's mind, that check's gone. That money's gone. It's been paid. But as far as the bar is concerned, that money is still in your trust account until that check clears. So if that check is still in your trust account, and every state is different, or not, states usually do 3 to 5 years to determine if funds are abandoned. If that money is still in there when it should be considered abandoned, you have to escheat that. And I think law firms miss that a lot.
All right, Amy, you've used this word escheating a few times now, and I'm going to take us back to, it's been a while for me since I studied for the bar. I do remember having to learn it, but I suspect that I'm probably like a lot of people sitting here going, oh yeah, what is that thing? So maybe you could just help us out and let's get everybody on the same page with the rules and why we need to care about this.
Yes. So lots of companies have to escheat, not just law firms. It's when you hold something of value, trusts, bonds, stocks, money, something like that. Sometimes it's refunds for a certain amount of time. And then you can no longer get in touch with the person that belongs to. You try everything in your power, phone number, email, mailing address. You can't get in touch with them. Then you are obligated to turn that money over to the state treasurer. For law firms, the timeline varies from state to state, but it's usually 3 to 5 years. So after having money in your trust account for 3 to 5 years, there's a whole process you have to go through. You have to make one final attempt to try to reach out to the client. And then once you've done that, you have to create a report and then submit that report to the state treasurer in the way that they want it, and then pay those funds to the state treasurer. And then at that point, if the client does come back, you have to point them to the state treasurer and say, hey, I've escheated your funds. They're now at the state treasurer. You'll have to go to them to get it. 2 states that are unusual are New Jersey and New York. They don't escheat to the state treasurer. They have their own fund called Lawyerist Fund for Client Protection. And I think that they take that money after a certain period and use it for different things. So this is just old funds in your trust account where you can't find the client. And this includes outstanding checks. So even if you have sent a check to a client and if it's still in your trust account after 5 years, I'm just going to use 5 years as general, then you need to you need to cancel that check or void that check and move that money to the state treasurer.
So you can't just say, oh, let me go delete that entry in my accounting and I'll just keep that money. That doesn't work.
No. I know as far as your accounting is concerned, that money's not in your bank account. But again, the bar doesn't view it that way. As far as the bar is concerned, that money is still in your bank account until that check clears, and you're still 100% responsible for it. So if the check doesn't clear, that money is still in there. You need to transfer it to the state treasurer.
Which is also a good reminder because I have done this myself. You can actually go, there's usually a website for your state where you can go and you can put your personal name or your company name in there and you can see if they're holding any money for you. So there have been a couple of times where I've done that and, some check somebody thought they sent me and I didn't get it, or maybe I forgot to deposit it. I don't know, but it's there. And then you fill out a form and the state sends you that money. So it's also a good little practice to go check it every once in a while for yourself.
It is. And so I'll also mention if you have gone past the timeline. So one big thing, if you get audited and you haven't escheated, you can get in trouble with the bar. But you can also get in trouble with state treasurer and you have to pay penalties and interest on that money. But almost all states have a process you can go to. In North Carolina, it's called voluntary disclosure, where you go in and say, hey, listen, I messed up. I didn't escheat this in time that I was supposed to, but I want to, moving forward, I want to do it correctly. Can you please, forgive me and help me to move forward? And especially if it's your first time, they will. They'll say, okay, yeah, we're going to forgive all the penalties and interest, submit your forms and your funds, and then moving forward, please follow the procedures and the timelines. So that's really important because if you just submit your money, you will get charged penalties and interest.
Yeah. Okay. Well, that's a good thing. So now everybody is secretly hitting pause right now and running over to their trust account to be like, what are the outstanding checks that we've had that, that we haven't done anything with for years? And I guess, it's also a good reminder because I probably was guilty of this when I practiced. We feel like we've sent that check and we're done, right? Like it just kind of feels like, whew, okay, I can close that. But really until the check clears, we need to keep calling that client, staying in touch with them, trying to actually get them to go cash the check.
And I have so many stories of, law firms writing small checks, like 10 cents, and sending it to their client. And their client is like, I don't want to cash a check for 10 cents. It's not worth my time to go to the bank or do whatever I need to do. And so they don't cash it. And then the law firm is stuck. You can't do anything with that until, the sheeting time has gone by. So another tip is there is language you can put in your retainer agreements that can protect you from that. Every state is different. You need to make sure you look at your trust handbook and see what your specific language needs to be. But it can be things like, very small amounts. It's called something, minimum amounts or
de minimis,
I think it's some sort of Latin term that I don't know. But if you put that in there and say that the client waives that amount if it's left in there, then if you have 10 cents left in there, you can just have it, move to operating and not worry about sending a 10-cent check to your client who's not going to want to cash that. And you also won't have to worry about waiting 5 years before you can escheat that 10-cent check. I had a client a few years ago who had numerous clients who needed to escheat, and most of them were around $1 to $5. And we're talking like hundreds. They had to escheat hundreds of clients, and they are all around $1 to $5. And it was just very tedious. And if they had had this language in their retainer agreement from the beginning, this would have been solved.
That makes sense. Okay, another term you threw out, casually, but let's just make sure, was the three-way reconciliation. And I know that's super important, and maybe you could just define that for us and make sure we are doing that right.
Yeah, so a normal reconciliation is always your general ledger, which is basically like your check account, your checkbook, where you keep track of what's in your bank account as far as your checkbook is concerned, and then your bank statement. And you reconcile those. So if you have any outstanding checks or outstanding deposits, they're going to be in your general ledger, but they're not going to be on your bank statement because they haven't cleared yet. The three-way reconciliation adds in the balances of all your client ledger cards. So your trust is made up of all the different clients you have balances for. So in the three-way, you're reconciling your general ledger, your bank statement, and then all the balances that add up to your total in your trust, which is all the balances of your ledger cards. So that's the three-way reconciliation, and that's what the auditor will want to look at when you get audited.
Yeah. Now, back in the old days, hopefully no one is doing this anymore, although occasionally I meet an attorney who pulls out their, little general ledger book. They're like a physical notebook.
Ledger cards.
Yeah. Or an Excel spreadsheet or something crazy, right? Guys, there's software out there that does this for us now. And I would, if you're not using it, please use it. It just makes it so easy. But that was going to be my question is, if I've set up my trust accounting using fill in the blank, there's so many software products that do this today. Is it kind of doing that three-way reconciliation for me? Or is there like another step that I'm missing that I'm not going to? I guess that's what I'm worried about, because we don't actually have ledger cards anymore. Like you're using that term. It's not like a card, but it's in the software. So
I feel like ledger cards is the equivalent of, the little floppy disk you click to save in all the Microsoft things. No one knows what that floppy disk is anymore, but we still click it to save. So ledger cards is the equivalent of that. No one uses actual ledger cards anymore, but that's what they're called. So if you're doing your bookkeeping in something like QuickBooks is going to do the bank statement and general ledger reconciliation for you. But QuickBooks doesn't have a great way of handling all the client ledger cards, and you can put them in as customers. There is workarounds you can use in QuickBooks, but it's not going to do the full three-way reconciliation for you. Yeah. And then in things like Clio, Practice Panther, all sorts of different case managements, they don't do the three-way either, but they produce the report you need. So they will produce a report that shows you the breakdown of every single client's ledger and then what they add up to. And that report is what you will use to look at your ledger card, your general ledger, and your bank statement, and then your ledger card balances. So as of right now, I have not seen a system that brought all of it together perfectly to reconcile everything.
Okay. But it sounds like if we run that report, that's probably the missing step that people are doing, because they probably don't know they need to go run that report and check that against their statements, it sounds like.
Right.
I guess the key thing here, Amy, that I'm hearing for you is like you need to check and see if your software is doing this, because maybe there might be a platform out there. Maybe they've even made revisions. They're always coming out with new features. So maybe they are doing this. I'm not trying to test your knowledge on every trust accounting software that exists. But the point is, if you're not sure, ask the question. Do you need to run a report? Do you need to push another button? Do you need to do something? Because chances are for most of us, we don't even realize this third step is necessary. I think that's my big takeaway here.
Yes, correct.
All right.
I would agree.
All right. Let me just ask you straight up, because I've kind of given this advice for years, but now I'm like, oh, let's see if the expert agrees with me. So we'll test my, I hope I'm right. But my very strong recommendation to lawyers has been, don't use QuickBooks for your trust accounting. It's not designed to do it. It makes it, and it's like you just said, there's some workarounds. So if you really know what you're doing, you can set it up the right way. But why? When there's so many other, programs out there that actually understand legal, understand the requirements of your accounts, and will help you set it up the right way. So that's always been my advice. And I would just love for the expert to tell us your opinion.
I agree. I do think QuickBooks has, a really good space in the legal world, because I also haven't seen great accounting software, especially accounting software that integrates with tax return software and things. So a lot of my clients do use QuickBooks, but then they use something else, like we said, like Clio, Practice Panther, or some other case management. And those programs are specifically made to keep track of your matters and your client balances and your activities and your transactions and everything that's going on with your client. And they are much better at keeping track of those balances and giving you a report. QuickBooks is not set up to do it that way. So I think using QuickBooks in a combination with something, or if your accountant uses something other than QuickBooks, that's fine. But I do think you need some sort of client matter management system that's going to keep track of all of that.
Absolutely. Because I hope we kind of glossed over this in the beginning, but I hope everyone knows you might have one single bank account that is, you set up as specifically what you go to the bank, and, in Georgia, it was really easy because it's like, these are the banks approved by the state bar. They know how to set up these accounts. And so from the bank's purpose, it's just one big pot of money. But for our purposes, it might be, 10, 50, 100, 500 clients who we have all their money in there. And we have to know, because it's almost like we have 500 different little bank accounts, and that all those bank accounts have to be precise. We can't, that's where we get ourselves in trouble, people, is if we think we can, the money's in there, let me just move it. That's not sufficient. It's like, is the money in client A, B, C's account? And if it is, then you can, and it's time, you can move it. But otherwise, like, those accounts have to match to the penny.
Yes. And one thing lawyers do a lot is they don't keep track of those, individual client balances. And then they think, I have plenty of money in my trust account. Look at this big balance I have. I can, of course, move money. But you do. You have to look at the individual client's balance, because overall, you might have plenty of money in your trust bank account, but this particular client doesn't. And if you move money for them, you technically go into a negative balance. And that is a huge no-no for trust compliance. So,
yeah. So, if people are hearing this and are like, oh boy, maybe they're feeling a little butterfly in their stomach. Like, I just don't know. I'm not sure, because like you said, this is an area when we get into accounting and numbers and finance that, lawyers sometimes do put our heads in the sand or pretend that that's not our strong suit. And my words to you guys is always, it has to be. If you're running a business, you've got to figure this stuff out. Like, right? Just no excuses. It's not that hard. But if they do need some help, is that something like you come in and like sort of almost not officially audit, like you were talking about an auditor coming in, but you can come in and be like, actually, let me make sure you are set up the right way and you're doing all your monthly process is correct?
Yes. So I have just a standalone service that I can come in and review up to 6 months of all of your compliance documents. And this can just be a one-time thing. Like if you're like, I think my accountant's doing a really good job, but I would really like to check. I can come in, look over everything and be like, yeah, your accountant's golden, you're good. Or I can be like, well, there's a area here or there. And I'm not here to replace your accountant. I can speak to them and say, hey, we're missing this area right here. Here's what you need to do. And then they can take it from there. I am very willing to work with whatever accountant or bookkeeper there is. So yeah, I can come in and audit, kind of do a small audit of your books to make sure that you are hitting all of the main compliance components. Yes.
Yeah, I think that's a great service. And that's why I was so excited to share, because I do think this is an area where sadly, we are just unsure, or maybe we unknowingly, I don't think, I'm sure there's bad actors, but I suspect for the most part, people are getting themselves in trouble simply because they don't know, like you said, they don't set it up the right way, or they don't manage it actively. And then it snowballs into big problems.
Yeah. And I think people need to understand the high level of consequences. So like you said, most people who get in trouble with trust compliance in the bar are not meaning to be fraudulent or to do anything wrong. They're just making little mistakes and then not fixing them quickly, or just not staying on top of things. And then the consequences are real. You have disciplinary action that can go anywhere from having to take time to fix something in your processes, all the way up to having your license suspended, to being disbarred. So the consequences are real. You have to take time and money to fix things, or even sometimes hire a general counselor to represent you in front of the bar. It is easier and less costly just to make sure you're doing things right from the get-go.
I love that. Great advice. I think we've learned so much today. We'll make sure to put Amy's information in our show notes so that if you do want to check out and see if you're in compliance, or just even learn more about all of these technicalities, these things that we need to get right, then, don't sit on this, guys. Make sure you get it done, and then you'll sleep better at night. So thank you, Amy, for joining me and reminding us about escheating laws, taking us back to Barbary.
Thank you so much for having me.